Welcome back everyone to another technical analysis, and today we're taking a look at POL USDT. Now starting off with the daily time frame, first things I would like to talk about the RSI, which is here. Let me drag it down. From where though? From here. So the similar pattern has been seen throughout this period of time, which means this area here. And let me just mark this one here as well. So price has been basically trading below the, or not actually below, but near the oversold area. So for quite some time, price has been dropping and dropping and dropping. Similar here, we had a break of lows, and starting from this time, we formed multiple lows area, and then eventually had a decent market structure break, and then RSI just hopped up. Now the similar thing is happening here because price, although we started with the RSI downtrend when we had this quick dip below the EMAs, what more matters to us is this doomsday dip we had. Meaning after we had this doomsday dip, we were recovering, and then since this day we just been in a decline trend, broke even the local low on the doomsday, and RSI again is just trending near the oversold zone. Now, what this means for us is very simple. Two zones on the daily time frame we will be looking at is first of all current local low, which is, let's call it 10 cents, and a more interesting area which would be this zone here, and the starting point would be this one as well. Let me drag it out. So that zone. Now, if we break the local low, of course, we will see a further movement to lower zones. God knows where, but anyways, the more likely scenario what we are looking for is the reclaim or the mark structure break area to happen near this zone. Then the reclaim of the local lows since the doomsday day when we had, and then a breakout and the full scale breakout structure forming near this zone. So something like this, we go from here, maybe struggle, go here, and then movement to the upper zones. And this is the key zone for now. That's also the key zone, and this is the smaller, like the first confirmation. Let's call this way: first confirmation, the second one, and this is the final confirmation for us. Now in this case, the stop loss should be somewhere in this region, which means like 20% loss, and then target first of all would be this area, which is 44%, and the major target would be this gap area here. Now, to give you a better understanding of the gap area, going to the hourly time frame and going to this zone here. Now, when we had this doomsday dip, we had first this, let's zoom it in like that. Whoops. So we had the first dip, we didn't have any kind of recovery, and then of course this whole candles pattern is basically the area for the unfilled gaps, meaning this area until this zone. Then of course this whole area for us, which is the starting point, and going here, going for our time frame, and God, so in the ideal world, 3 target zones would be 4 target zones even. First target zone, second, third, and fourth. So the daily time frame still seems a little bit bad, in a bad shape, because we wait for further confirmations which we haven't gotten yet. But on the daily time frame, what we see, sorry, the hourly time frame, what we see is a formation forming near the EMAs, meaning what, let's delete it complete now. I'm going to start with fresh one here. So drawing this one out, drawing this one out, and going to draw this one out. Now each time price reached the EMA's area, similar to this here. So we reached the EMA zone, we had a breakout, quickly grab the EMA zone, let's put it here as well, the EMAs, same here, and let's call this one as well. Now we didn't have any kind of proper movements or breakouts here, but now what we are seeing is we had a decent recovery during the weekends. If buyers manage to break out through this area, then this can be a smaller long position entry for us, with the target being around 6% and stop loss being, let's drag it down, 3%. So risk reward ratio in this case is 1 to 2. Now, ideally, this would be the first take profit, and this would be the major target area. So this area and this area, the liquidity zones, which been broken since like we had an uptrend, breakdown. We had slight uptrend, even sideways movement, breakdown because of the pressure from the EMAs. Same here, we had now more of sideways channel with downside pressure, you can see here. And now price is going for the breakout. If all plays out nicely, then we should see again the breakout structure from this area, and then an easy setup which could give us like 17% of market price movement. So anyways, that's it for today. Once again, thank you for watching this video, and I will catch you tomorrow.